Welcome to the Synergy Sessions, Aging Smarter in Silicon Valley. I'm your host, Tom Nelson, and I know firsthand as a family caregiver and part of the sandwich generation how tough it can be to take care of your aging parents while balancing your own life, career, and family. We'll bring you the experts and information necessary to help make your life a little bit easier and you a little bit smarter. Synergy Sessions is brought to you by Synergy Home Care, bringing you personalized in-home care and peace of mind to Silicon Valley families. I really do hope you enjoy the show. Welcome to the Synergy Sessions. I'm Tom Nelson, and I'm going to help you age smarter in Silicon Valley. Today, I'm super excited. We have Steele Nakamoto. He is from Black Diamond Finance. At Black Diamond, we are dedicated to safeguarding the futures of individuals and families by providing innovative financial solutions. We empower our clients to live life to the fullest, knowing that they are protected, supported, and prepared for whatever comes their way. We believe in creating lasting relationships built on trust, integrity, and commitment to excellence and service. Welcome, Steele. Really appreciate you being on the podcast.
Yeah, thank you for having me, Tom. I really appreciate it.
Yeah, you're welcome. So, Steele, you're a life insurance agent,
Yes.
but we're talking about alternatives to long-term care. So people are probably thinking, why do we have a life insurance agent on here? Well, I think most people know about long-term care insurance in general. So it's kind of like car insurance. So you're buying insurance, use it or lose it in the future. If you need long-term care, whether you have dementia like my folks did, or you are frail elderly or need extra support in your home, or you go to a long-term care or assisted living community or something like that, long-term care insurance typically will help you pay for that. But if you are of sound mind, body, and you're able to stay in your home without support or that need, then you don't use it. Just like if you don't get in a car accident, you're not going to be using car insurance. So what we're going to be talking about today is living benefits and how that's different from traditional long-term care that I just described, and how that rolls into or relates to life insurance, which is your role, Steele. So why don't we start off with just tell me, what's your role and what does your company do in general on kind of a high level? We'll start
Yeah,
there.
sounds good. So, like you said, my role is that of a life insurance agent. And just really quick background, we can help people from as young as 14 days old all the way up to age 85. So I know a lot of people think life insurance is something that is better to get when you're younger, especially young parents that just have newborns, toddlers, young kids. And yes, that's true. But it's something that we can help with our seniors as well. And so with my partner company, National Life Group, it's long-term care, like you said, is something that we're very familiar with. It's a term that we hear a lot in the senior community.
Right.
And it's designed to cover the costs of pretty much what it says in the name, long-term care services, right? Usually it's used for those who can't take care of themselves due to like illness, injury, medical conditions, just really the difficulties of getting older, right? So with my partner company, National Life Group, like you said, what we offer is living benefits. And it's just another way for people to access money when they're having trouble doing things such as what long-term care covers. If someone has difficulty performing the ADLs, the activities of daily living, which include bathing, dressing, continence, eating, toileting, transferring, long-term care insurance can be effective in helping take care of those costs. Now, National Life Group, again, we don't offer long-term care insurance. So that's where the living benefits comes into play instead.
Right.
Living benefits has been around for almost 30 years. So it's fairly new compared to life insurance as a whole, but it's been around for a pretty good significant amount of time as well.
Yeah.
And it's basically just a rider to a life insurance policy. It's, like I said, another way for policyholders to access the policy money while they're alive, hence the term living benefits.
So a typical life insurance policy, like a whole life insurance policy, would include a death benefit. So if you die, then you would get that benefit for your surviving
Mhm.
beneficiaries. But with the long-term care or a living benefit rider, then if they had an so how does that work? So do they need a qualifying event to access that? Because I think in all as a whole life insurance policy, you can access cash for whatever you
Mhm.
want it for at some point, whatever you put into it and it's matured over time. How is that different from just pulling cash out versus having this living benefit rider on your life insurance
Yeah,
policy?
that's a really good question. So we do offer that as well, like whole life, IUL, which is index universal life. Those are some of the more popular permanent policies. And like you
Mhm.
said, there is a cash value component that's included with those. So think of it as having two buckets. In one bucket, you
Mhm.
have the cash value part of it, where there's money
Yeah.
that you're putting into a financial strategy and it just continues to grow over time.
Right.
If you're fortunate to live a long, healthy, happy life,
Mhm.
then that money
Mhm.
will keep snowballing, compound interest
Mhm.
and all the good stuff, and then you'll have a pretty nice sizable amount of money to access on the back
Right.
end for whatever you want. Now, the other bucket is the living benefits and also the death benefit. So it's the part where traditional life insurance, where someone passes away, that sum of money that was reserved for death goes to the beneficiaries. Now,
Mhm.
what life insurance companies have added is a way to access that same money that was reserved for death, but now use it
Yeah.
while you're alive. So one bucket is the cash value, the other bucket is the death benefit and living benefits. And there's certain qualifying events that would have to happen in order for somebody to access the money. Every company is has something a little bit different. So there's no two companies that are made the same. And I can't speak on behalf of those other companies, but what I can do is
Right.
speak on behalf of my company, National Life Group.
Sure.
And some of
Mhm.
the triggering events are very common illnesses like cancer, heart attack,
Mhm.
stroke,
Mhm.
Alzheimer's. Those are all very,
Mhm.
very common in today's day and age. And there's a bunch more. We
Right.
cover about 20 in total. So, in addition, if someone
Okay.
can't perform two of the six activities of daily living, then that's another way they can access the policy money through living benefits.
Got it. So in general, I mean, so kind of drawing back compared so very similar to traditional long-term care insurance triggering
Mhm,
events, because what you just described is kind of very similar to just so that's what people are
mhm.
familiar with. It's like there's a triggering type event. This is just a different way to pull it in. So if I understand you correctly, you have the two buckets, you have the cash value and then you have the death and living
Correct,
benefits. So they're not two separate buckets. They're one bucket. It's kind of an either or.
correct.
So you're drawing off the living benefit slash death benefit, as however you need it. So if you pass, it goes to the beneficiaries. If you need long-term care or, so not long-term care insurance, but if you need long-term care
Mhm.
in your home, you can apply the living benefit to pay for those expenses, but it will draw against that total bucket of the living and death
Yes,
benefit. Is
that
that
is
correct?
correct.
Okay, got it. So what's the process for people? So you said you from 14, did you say 14
14
days
days.
or 14 months? Okay, 14 days. I guess that's with viability or something. 14 days to 85 years old. So what is probably the sweet spot for people, thinking about this? I mean, many times in my job with home care, they're up against home care and it's like, oh, can we get some insurance for this? It's like, well, it's already kind of a little late, I think, in general, just like you can't get car insurance after you've already totaled
Yeah,
your car. So when's a good time for people to start thinking about it before it maybe becomes too expensive? Because, as you get older,
right.
it goes up like anything else. The higher the risk, the more expense. So when's a good sweet spot for that? And what's the process? Do they have to do like a medical or like how does that
Yeah.
work in general?
So I think it's best to get life insurance with living benefits really as soon as possible. We see
Mhm.
most people this day and age getting it in their 30s and 40s, pretty much like I said
Mhm.
earlier, when people start having families and young kids, they start thinking about the
Yeah,
preparation they have to do in case something happens to them, right? And it's very
right.
common and obviously it makes sense. But the sooner you get it, the cheaper it is as well. We're only going to get
Yeah.
older. Sickness waits for no
Yeah.
one. And the
Yeah.
unfortunate thing is, and I was the same way, many younger people, especially when you're in your 20s, you tend to
Yeah.
think, "Hey, I'm young and healthy. I don't need to think about anything like
Yeah.
this. I have a long time to
Right.
go before anything like that happens." But Tom, you
Yeah.
and I both know how fast time flies.
Yeah.
It felt like just a
Yeah.
few
We were
years
just
ago.
talking about that.
We were just talking about it, and I can remember when I turned 21 like it was yesterday. I was on an airplane to Las Vegas, literally, the day I turned
Yeah.
21, and then all of a sudden, I'm turning 40 years old just like that, right?
Yeah.
So
Yeah.
so sickness, again, illness, it waits for no one. I've had friends who've had heart attacks in their 30s. I've had some other
Oh,
friends
wow.
who had heart surgery in their 40s. Another friend whose
Right.
daughter, her infant daughter was diagnosed with cancer as a toddler. And then another
Yeah.
agent in our office who has a 2-year-old daughter, or at the time, a 2-year-old daughter, who was
Mhm.
diagnosed with leukemia.
Yeah.
Imagine this. Imagine being a father. You have
Yeah.
this little child that you're so happy to have, infant
Yeah.
daughter. And when he got it, it was meant to be for the financial strategies that
Yeah.
that we just talked about. But then 6 months
Yep.
later, this little 2-year-old has a nosebleed. No big deal, right? It's
Yeah.
just like nosebleed,
Right.
stick a tissue in it, and let it heal itself, right? Kids get it all the time. But
Yeah.
then shortly after, she coughs out a little blood. Now that's a
Yeah.
little more concerning, right? So
Yeah.
they did what any parents would do. They went to the emergency room. I mean, just think what they're
Yeah.
thinking, right? Can you imagine that? Your kid's going to emergency
Yeah.
room. You have no idea what's going on.
Yeah.
This is a small child. So the
Yeah.
lab test confirmed what the doctors feared, and is that this girl had leukemia. Now,
Yeah.
because they had a policy with living benefits, they were
Mhm.
able to put in a claim that paid them out about $400,000. And
Yeah.
through the living benefits money, they were able to put
Yep.
their careers on hold. They were able to stay with
Mhm.
their daughter for 32 days in the
Mhm.
hospital while she was undergoing
Yeah.
treatment. And the best
Yeah.
news, I just found out a couple weeks ago, this little girl, she's doing very well. She's about 4 years old
Oh.
now, and she's doing very well.
Oh,
It's great
amazing.
news, but
Amazing.
it's great
That's
news, yeah.
incredible. Well, that's something I didn't think about. Thank you for bringing up that up because, when we think about long-term care or, in-home care and those things because of sickness and aging
Mhm,
and those things, and I wasn't even aware of this, that so any type of, you get hit by a car or something like that, I would imagine like there's some qualifying event at any
mhm,
age. So you get cancer. Cancer isn't an old person's disease, as you
yeah,
just described. It's a everybody disease. Anything can happen to you. So this protects you ahead of that. It's kind of almost like a disability insurance type of thing, but for somebody who's, you know, working, but this is even for kids
yeah,
as well, like you just described. So that's that adds just another really great layer that makes a lot of sense. So so that leads me to so in that situation, you said the father, the family initially were using it as a
mhm,
strategy, like an investment strategy, I'm
yeah,
imagining. So they would do a life insurance with a living benefits rider for each individual person in their family.
mhm,
So that's how that
yeah,
works?
yeah. So in his case, I believe it was everyone in his family got their own separate policy.
Mhm,
And, it's interesting how your intent was for one thing, but ended up having
mhm.
to use it for another thing.
Yeah,
And it
right.
just is something when you think back on it, how amazing it is to have something that's very flexible and very versatile and
Mhm.
covers you in so
Right,
many different ways. But
right.
what I want to make sure people know is that at the end of the day, this is still a life insurance plan.
Yeah,
And you have to qualify for it with your health first. So that's
right.
something that people have to keep in
Right.
mind. So that's why it's better to get it
Yep,
when you're younger, when you're healthier.
right.
Not only is it the
Yep.
cost that's cheaper, but because your health is in usually better for most people,
Right.
then it's something that
Well, that was the second
yeah,
part of my earlier question. So this is good. What is that process? If you're a kid or like, does everybody have to go through a health screening or how does that work?
not everyone has to go through health screenings. So We send in the application, and the our company will have access to like the medical records for somebody, and they'll look
Mhm.
through that first. And if someone pretty much has a healthy life, then they can get
Yeah.
an instant approval where within 5 minutes
Okay.
it'll say something that says, "Oh, instant approval," and they'll still have to go
Yeah.
through some extensive checks just to make sure before they send out the documents to sign. But
Mhm.
a lot of people more and more nowadays, if they have a clean bill of health, they'll get approved right away. But then as
Okay.
you get older, again, this is where the health
Yeah.
issues come into play and the
Right.
likelihood of health issues too. So if somebody's in their late 50s, 60s, or even 70s,
Mhm.
the chances of them getting that instant approval will be less likely. And
Sure.
they may require some medical tests, which is just somebody coming to their house or wherever it is that
Yeah.
they can meet and just do, blood tests, urine tests, basic stuff at
Mhm.
first. And then if there's other things, then there might be a little bit more on top of it. But if
Okay.
someone's healthy, that's the best time to get it.
Yeah. No, that makes sense, and like you said, if they're a child, their their premium is gonna be the lowest it's gonna be,
Mhm,
and, the approval is gonna be there. Uh, so you already mentioned this isn't new. It's been around for 30
mhm.
years. How come it's just starting to surface now? How come this isn't something that's already been a thing that people just automatically get? Or maybe it's just my, you know, ignorance around it because up until just a few years ago, I wasn't even aware that this existed. And most people that I talk to aren't either. They think about just long term care
Mhm.
insurance. And then when I bring it up and say, "Oh, there's so many different options these days that cover a similar, you know, type of benefit, but aren't specifically long-term care. Is it just because it's becoming more prevalent now that people are gonna need it or more people? I mean, why is this now becoming a thing if it's been around for 30 years and why doesn't everybody have it?
That's a really good question, and it's also a question I ask myself to this day.
Mhm,
It's something that
mhm.
everyone really needs to know about, and
Yeah.
I don't know why people don't talk about it more, to be honest, and
Mhm.
I think it kind of goes back to people just not wanting to talk about death or getting
Yeah.
sick. It's
Yeah.
an uncomfortable
Yeah.
conversation. It's not
Sure.
often that people are out there sitting around at a coffee shop and talking about their life insurance plans.
Yeah,
Not unless
yeah.
you're 70, 80
True.
years old, then
Yeah.
that's a little bit different, topic, but when we're younger, when
Yeah.
we're 30s and 40s, our conversations aren't about life insurance, so I think
Right.
it comes down to first just the conversation at in the beginning, because somebody
Yeah.
might have it, but they won't tell their best friend that they have it. That's not what we
Yeah.
wanna talk about. Everyone's conversation is about their
Right.
kids, work,
Yeah.
life, vacations, and not so much
Right.
life insurance. And I think it's important
Right.
that it's a topic that becomes normalized because we do want
Yeah.
to be prepared for whatever can happen in the future. Anything can happen at a
Yeah.
moment's notice. We can step outside,
Absolutely.
get hit by a car, and most people these days, because of the cost of living, most people don't have
Yeah.
money sitting around to pay for whatever
Yeah.
care that they need. Yes,
Yeah.
pretty much
Right.
everyone should have health insurance at this point, but
Yeah.
health insurance doesn't cover everything. And then
Right.
they'll be in a hospital for however long, thinking their health insurance covers everything. And then they get this
Yeah.
big bill from the hospital, and they'll be shocked
Mhm.
and they'll be surprised, like,
Yeah.
oh, wait, I can't afford this.
Yeah.
So then
Yeah.
what happens when they can't afford it? They open up a GoFundMe,
Yeah. Yeah.
right? Very, very common. And
Right.
I see it all too often. I wish I can
Yeah.
pay and help people cover all of their expenses every
Yeah.
single time, but it's just so
Yeah.
expensive. So that's where
Yeah. And I think these days there's like GoFundMe
it
fatigue.
is. And that's where living benefits comes into play. It is something that
Yeah.
can help eliminate the need for someone having to open up a GoFundMe. Most GoFundMes
Right.
don't even reach their target goal, not even close to it. I
Mhm.
believe I was just
Yeah.
looking up the statistic. I believe only about 17% of GoFundMes hit their target. 17.
Oh, yeah.
That's super low, and in
Yeah.
some cases, it's not even that
Yeah,
big
yeah.
of a target goal, 5,
Right.
30, 40, fifty
Yep.
thousand, maybe, and
Yep.
a lot of times these living benefits policies will cover those expenses and then some.
Yep.
But
Yep.
again, it just starts with normalizing the conversation so
Yep.
that people
Right.
are comfortable talking about it, and I
Yep.
figure once that happens, it's gonna be easier and easier to talk to more people about it.
Yeah. Well, I was just thinking as you were talking, I think most people, when they are in their healthy years, is also usually in their lower income years. So something like this is just an extra expense, regardless of how much it is. It could be $5 a month. It's still an extra expense. If you don't perceive that you need it, then you're not getting it until you have a triggered event, have something happen. Now you're in your 50s, 60s, 70s, like you said. Now they're thinking about it. Now they want to talk about it. And that's when it's too late. Well, hopefully the podcast will help get the word out a little bit. Part of what I try to do is get the word out for these best kept secrets, because if nothing else, just to be able to have the
Mhm.
conversation around it and see what the options
Right.
are and to see what you're actually looking at, and these these different stages of life. Okay, right now you're healthy, it's costs about this much. You go into your next decade of life, it starts to go up, and these are the different things. And just inform yourself on what the opportunities are to cover you and your family. In the opening, which you have your company on the website, it says being prepared for whatever comes your way.
Mhm.
We talked about
Yeah.
this earlier too. I mean, that just hit me so hard, because as just a person living on this earth, you never know what's going to happen. I mean, I've had stuff. I'm sure you've had stuff. Everybody's had things. That the story you just described with the little girl with leukemia, no one's preparing for that. And so to be able to have something that that is multi-pronged, that's not just, I'm going to go back to long-term care insurance. That's purely, really, I would say most of the time, for an
Mhm.
aging type of application, as opposed to any time in your life when you need this. Because you're right, health insurance covers some of the medical
Mhm.
bills, or a percentage of the medical bills, depending on what you have, deductibles, out of
Right.
pocket maximums, all that type of stuff. But it's not covering you taking time off work, like you described. It's not covering after you get out of the hospital and you need somebody one on one, which is my business. Sometimes if you don't have family members around, you need somebody to help you out for certain ADLs, like you're describing, those types of things. That's not getting paid by health
Mhm.
insurance, because that's all non-medical.
And let me tell you another thing that it doesn't cover as well is when you're trying to get healthy, going through whatever treatment or therapy that you have to go through, it also doesn't cover your regular bills, right?
Yeah.
You still
Right.
have to pay your mortgage, you still have to pay your rent, utilities, phone
Right.
bill, groceries, just the
Yeah.
everyday costs of living in America.
Right.
And living
Yeah.
benefits can help cover those costs as well.
So it acts like I was talking about before, somewhat like a disability insurance or something
Yeah.
like that. But that's very specific to being out of work. So it covers that. It's more of a catch-all, and it's covering it's more of a Swiss Army knife. It'll do a lot of different things, as opposed to very
Yeah.
specific to long-term care or disability care, So, because all those different dimensions of insurance have their own specific requirements and trigger events
Mhm.
and authorizations and all that stuff. And this seems just a little bit more flexible depending
You
on
nailed it on the
what it
head,
is.
yeah. 'Cause
Yeah.
we actually call it the
Excuse me.
Swiss Army knife of life insurance, so yeah,
Oh, really? Okay, great. Well, hey, we're on the
we
same
are.
page. We didn't talk about that
No, we
ahead of
didn't.
time. So, like, it's apparent to me that that's kind of what it is. So, that's awesome. So, we've talked about a few different things. What else about this program? So, the life insurance in general, as we talked about, two buckets. You got your cash value, and then you have your living and death
Mhm,
benefit. Uh, and then we talked about all the different applications for that. What opened my eyes to not just for aging. I mean, we're talking about aging smarter in Silicon Valley is the premise of this, but in the event, you are in the sandwich
mhm.
generation, That's really a big target of this podcast, people that are helping taking care of their parents as well as their own families. You know, in addition to making sure your folks have something like this, that you have it for you and your family, because this could happen for your kids, yourself,
Hmm.
and your parents. This is
Very much.
multi-generation. This is across the lifespan, um, which I wasn't even thinking about. So I'm glad we're having this conversation. Maybe we'll help, um, perk people's ears up a little bit to inquire for their own situation. Is there anything else we didn't talk about that maybe we missed that's important to know? I mean, is there maybe any misconceptions about living benefits that people rumors, misconceptions about, hey, don't get that because of X, Y, and Z? That happens for a lot of things. I'm just wondering if you want to dispel a myth or anything that may be not true.
So the first thing I want to say is, at least with National Life Group, living benefits comes at no additional cost. Again, you just have to
Mm,
qualify with your health for life insurance. And this is something that's opened up to pretty much everyone who has a policy with us.
okay,
So
wow.
that's very important to know. But also, no two companies, again, are made the same. So just because
Yep,
National Life Group does it this way doesn't mean another company will do it the same way. It just comes down to the
right,
company, how they're set up, the financials, and all that
right.
stuff. So every company is very different, and it's important
Uh-huh,
whether someone's looking at a National Life Group or one of the other companies, that they make sure they
mhm,
understand all these different things. Make sure they understand, if the company offers some sort of living benefits, understand what it is
uh-huh,
exactly that they're getting. It's important to read the
uh-huh,
fine print. There's a reason it's a fine print.
right.
So they don't,
Yeah,
because they don't want you to see it. So it's important to read all of those little things as well, because I
right.
know that there are people out there who think that they had a living benefit package with their life insurance. And then
Yeah,
when they saw that they needed it for, let's say, a heart attack, they finally read the
yeah.
fine print and it said, "Oh, well, you pretty much have to be on your deathbed to access the money."
Oh,
So
geez,
it's
yeah,
important to know all these little things, but that's also
yeah,
where a good agent comes into
right.
play. So
Yeah,
that's one thing to make sure people are aware of. The other concern for a lot of people is cost. And I certainly understand it. Like you said, when somebody's younger, cost definitely becomes a factor. But even when we get older, it
yeah,
becomes a factor as well.
yeah,
So
sure.
don't just think that life insurance is something that's super expensive. It can definitely be made
Mhm,
affordable. And that's what I love
yeah,
about what we have with National Life Group, is that I can tailor these policies to fit within somebody's
mhm,
budget. It's just a matter of
yeah,
figuring out what their situation is, what their goals are,
right,
what they need, and I'll just use that as a starting point. But if when we put
yeah,
all that together and I come up with whatever the number is, if they think it's too high, that's
yeah,
perfectly fine. I can work backwards
yeah,
and fit it in their
yeah,
budget. If they can do more, then great.
right,
Then we'll increase it to whatever that it is that they're looking for. But it starts with having the
yeah,
conversation. And
right,
from there, it's easy to fit within somebody's goal. The last thing I want is for someone to feel like this is another bill. I
yeah,
want them to
right,
understand the value that they're getting with it, so that it's something they understand that's important, but also knowing that they're going to get something back on the back end.
right,
So I
yeah.
tell my clients,
Well,
I
oh, go
tell
ahead.
my clients that with certain policies, they're going to get their money back in one of three ways. So it's not what a lot of
Mhm,
people think about insurance. You pay into it, it goes away. So with certain products of ours, they're going to get their money back in one of three ways. The first one is the death benefit, which no one wants to
mhm,
talk about that. It's not
yeah, that's the worst way to
it's
get
the
it.
worst way. And you're not even going to be the one to get it. It's going to be
Yeah, you don't even get to enjoy it.
no. So let's stop talking about it there. The second way
Yeah,
is
yeah,
the living benefits part, which we've been talking about,
yeah,
where somebody were to get
yeah,
ill or get seriously injured, then they can access that money again while they're alive. And then there's the third way, which we touched on, where there's the financial strategy built into it, like whole life, index universal life, or
yeah,
some of the more common ones. And
yeah,
again, if they live a nice, long, healthy, happy life,
mm,
they can
yeah,
access that money for whatever they want to do it for, use it for.
yeah,
And the best part is tax free.
yeah, yeah. Well, I hear about that all the time. They have lots of different names for it, but it is, yeah. So it's an investment strategy for your retirement and all of that as well. Some coverage is always better than nothing. And as your financial situation changes over time, you get into maybe a higher earning years of your life, then you can upgrade it
Mhm.
later and and shift it on at a later date. It'll be indexed at like whatever age you are at that
Right.
moment, but it's it's okay. I mean, it's you can layer something else on or you can always change it, but it's not a either or like a all or none type of
Mhm.
thing. Like you said, you can work on what's your budget or what's your afford, how much can you afford based on your goals, and you can start there
Absolutely.
and do something in the future. Well, this has been fantastic, Steele. I really appreciate it. I think there's so many dimensions to this, and thanks for kind of pointing out a few things that I think really opened up my eyes, and I think hopefully with some other people that this is something to explore. I think also, you're our local San Francisco Bay Area guy
Yeah.
and in general. I mean, this is a local podcast and I want to have guests on that are local that you can actually call up and meet in person and all that kind of stuff. But if somebody's out of the area, you brought up a great point. There's lots of different companies out there. At least explore it.
Mhm.
If your company, I mean, nationals in the name, so I would imagine they can contact your company wherever they are, or you. I don't know how you're licensed across the country, but what we'll have is all of Steele's information on how to contact him or his company if you're out of the area, or all the ways that make sense. You can get some more information if you want to learn more about your specific circumstance and explore different you know opportunities with this type of coverage with the living benefits connected
Yeah.
with the life
So
insurance.
so the last thing I do want to mention, especially when it comes to our senior citizens, because I know this
Uh-huh.
podcast is centered more around seniors, right? And we
Yeah.
always hear about, of course, long-term care, but the other thing we hear about too is Medicare. And
Yeah.
I do want to touch on that as well because I think a lot of people don't really understand Medicare, and I really am
Right.
just getting to learn more and more about it as well.
Mhm.
And Medicare is great. It's a great
Mhm.
foundation, especially for those who are 65 and older, and it'll help cover what
Yep.
hospital stays, doctor visits, prescriptions, right? Basic things. But it
Right.
doesn't cover everything. It
Yeah.
doesn't cover long-term care. It only covers
Right.
what the short-term skilled nursing rehab, but it doesn't cover
Yes.
extended hospital stays, out-of-pocket.
Only medical
Yeah, only
to
medical.
start. So my business in home care, Medicare, for the most part, does not
Wow.
cover any of it because it's non-medical. And Medicare, like other health insurance, is medical
Mhm.
based. They're starting to do a little bit more,
Good.
very specific circumstances, but your doesn't cover a lot of these expenses that we're talking
Yeah,
about, specifically the long-term care piece,
yeah.
because that's the non-medical. Just somebody being in the house and helping somebody stay independent
Mhm.
is not a health medical issue. It's a day-to-day need, but not
Right.
medical.
And this is where living benefits can come into play as well. Living benefits can fill in
Yep.
those gaps that Medicare leaves
Yep.
behind. It can fill in those gaps that
Right.
long-term care leaves behind as well. It offers a lot more flexibility to use the funds
Mhm.
for whatever someone needs to use it for, right? So
Right.
it's very important for people to know that because you don't know what you don't know at the end of the day, right? And
Yeah.
living benefits
Yep.
can be that safety net for things that Medicare
Yep.
does not cover.
Right. No,
Mhm.
agreed. We had on Eva Peterson, who's an insurance broker, and she also and Medicare is her
Mhm.
biggest piece. And there's so much, I thought, oh yeah, Medicare, you just turn 65 and you go on Medicare and everybody gets the same thing. No, no, it's like anything else. There's so many dimensions to
Yes.
it. And like you said, there's a lot of things it doesn't cover depending on what type of plan you have, if you're on the Advantage but that's a whole nother rabbit hole to go into with Medicare for sure. But that's a great point. I mean, health insurance, Medicare, there's disability, there's all these other very specific type of either health insurance or specific insurance type buckets that don't cover everything. And this, what we call the Swiss Army
Yeah.
knife, the living benefits help kind of close those gaps and provide some security there where you're going through a tough time and need to
Mhm.
access that.
Absolutely.
So thanks for bringing that up. So what is the best way to contact you? Well, like I said, I'll have all the information in the notes, but email, your website, phone call, all the
Yeah,
above.
all of the above. Email is probably the easiest.
Yeah.
You can contact me by phone as well, but I'll just be
Yeah.
honest, I don't pick up all my phone calls if it's random numbers.
Yeah.
We all
Yeah.
get a
Yeah.
lot of random phone calls we don't wanna
Sure.
pick up, right? So I'm very careful about
Right.
when I
Right.
do pick up my phone calls, but I do
Yeah.
listen to my voicemail messages, so I know there's a
Sure.
lot of people who don't.
Perfect.
Leave a voicemail if I
Yeah.
don't pick up, send me an email, text
Okay.
message, that's perfectly fine as well. They can
Okay.
also find me on my
Awesome.
LinkedIn, which is just my name, Steele Nakamoto,
Okay.
and I'll be able to
Okay.
respond there as well.
Perfect. So thanks so
Thank
much,
you. Thank
Steele. Really appreciate it. This has been really enlightening. I'm gonna need to book an appointment with you again. We did one already to review my
Yeah.
circumstances and opportunities because it is really important to make sure you can do whatever you can to prepare for those unprepared situations that come up in
Yeah.
life, and you want to make sure that you have what
Mhm.
you need. So
Abs
thank you very much. And thanks everybody again for joining us on the Synergy Sessions, Aging Smarter in Silicon Valley. And we will see you next time. Thanks,
Bye.
Steele. Thank you for joining us on the Synergy Sessions. We know you have a lot on your plate, so we really appreciate you spending the time with us today. If you found the information in this episode useful, please reach out to the guest or the resources in the show notes. I know they would appreciate it and would love to help. Also, if you have an idea for a future episode, please reach out to us on Instagram or Facebook or email us and let us know. We'd love to hear from you and provide information that's useful. Lastly, please remember, you don't have to do this alone.